Hello, and welcome to Blockchain Bylines. My name is Nicholas Carey, co-founder and vice chairman of blockchain.com. For this episode, we're excited to host Andrew MacKenzie, founder of Agant, to talk stablecoins. Agant is building a regulatory compliant UK domiciled GBP stablecoin that aims to be the global option for transacting and storing wealth in pound sterling on chain. So, Andrew, thank you so much for joining us.
Thanks for having me. Great to be here.
Okay. I'm going to ask you a little question. How did you earn your first pound, your first euro when you were a wee lad up in Scotland? You were telling, how did you get into knowing about money in the first place?
Yeah, that's a really good question, actually. I grew up in an agricultural area, so my background is agriculture. So I think it was probably something to do with that, being on like the back of a potato harvester or going out and roguing wheat and barley. So no, I was always sort of in the dirt as a kid growing up.
Well, there are a lot of farmers in crypto, and we use a lot of farming vocabulary in crypto as well. So I guess that's a great segue to how did you get into crypto after a background in agriculture?
Yeah, so I mean, I vividly remember my friends telling me the first time my friends told me about Bitcoin when I was about 12 years old. And I thought it was a ridiculous idea and it was never going to work. And I was like, this is just stupid. Like no one, what on earth is this? And then slowly but surely as time got on, as we got into like 2015, 2016, started to buy a little bit and really sort of take a little bit of an interest. But to be honest, my real interest and intrigue into the space didn't really peak until during COVID in 2020, when the price of Bitcoin and Ethereum disintegrated. My interest spiked and then got massively into DeFi towards the end of 2020 into 2021, and it kind of just went from there.
Got it. Well, I was excited to meet the sort of new vintages of entrepreneurs in the space. So you've gone from farming to learning about money to getting into crypto and more. Let's talk a little bit about stablecoins. Stablecoins, I think, are one of the big stories of this decade. And I don't think people always have a good understanding of what they really are. And a lot of the money is digital already. If you go to your account, you see it on your phone app. So what's sort of the difference between that and a stablecoin? Give us like a really easy answer so that you could explain this to the farmers back home. What's a stablecoin?
Yeah, I need to make sure I don't breach any regulatory definitions or something like that. But to me, a fiat-backed stablecoin is a digital representation of a fiat currency, whereby it's backed one-to-one with collateral, that is held in a secure manner, generally bankruptcy remote. You should always be able to mint and redeem a stablecoin at par, and for me that's quite an important aspect of what a stablecoin is, and really one of the sort of foundation layers of what we're building at Agant.
If most pounds are already digital and there's open banking, why would we even need a stablecoin for the British pound?
I think the best way to look at the innovation in financial technology and fintech over the last 20 years is the front end innovation in UI and UX has been massive. It's been groundbreaking. We have this illusion of seamless, instantaneous transactions when really in the background there's not been the same level of innovation, and so I think moving finance on chain represents is that back end innovation matching what we as I guess users of financial products see on the front end. We have that illusion, as I've touched on, of things being instant, whereas they're actually not. There's a lot of tying together of traditional clunky financial systems, and really what we're doing now is when things we do have instantaneous atomic settlement. When I guess the best way to look at a blockchain is a very efficient and effective way of moving value from A to B very, very quickly.
A to B could be from Glasgow to London, or London to Burkina Faso, or London to Calgary or Toronto or anywhere. And I think you've been talking about some of the use cases for stablecoins. What's most promising to you, especially for some of the bigger businesses that have to move a lot of money across borders? What kind of companies do you think would benefit from using GBP stablecoin?
Yeah, I mean, I think the biggest difference between, if you think about crypto and fintech integrating with blockchain technology, I actually think they're two different things. Crypto is very much US dollar denominated, and probably that will always continue to be the case. However, global international finance is not. So I think if you take a step back and look at what do blockchains represent, it's this global homogeneous transaction layer the like you say, it doesn't, it doesn't discriminate, where you are globally. So I think it presents a lot of advantages. I mean, for us, we see sort of 4 key use cases, settlement, remittance, FX, and also as a collateral asset. Obviously FX and remittance are almost a subset of settlement. I mean, instantaneous settlement is massive and transformational for many businesses. Where we see sort of the initial take up is obviously within, modern day fintechs and financial services, being able to bring the delivery and the payment of an asset onto the same transaction layer is really big for them, reduces a lot of credit risk, etc. However, also for large PLCs that have, global businesses and also large exposure, but not just that, also within the UK, we think, for example, take faster payments. If I was to send you a faster payments transaction, it's great. It appears instant and it also appears free. But in actual fact, in the back end, it is not really instant, and it's actually not all. It's also quite, relatively speaking, quite expensive. So I think there's a number of different areas that we can go after as a business and really deliver value to both businesses in the UK and further afield.
I like the way you frame that, which is sort of like this future proofing of the financial system, kind of the final next upgrade on the back end to actually make it better, cheaper, faster. And so some of the front end stuff has been fixed, but actually under the hood, there's still a lot of inefficiency. It's still a rent seeking system. There's still a lot of, sort of systems basically coordinating between each other, which is extremely expensive to run. Where if you compare that to an always on instant, very low cost settlement network that has a global nature, I think you start to see why this would be really attractive to businesses. So let's talk a little bit more. Where do you think stablecoins fit within the finance crypto ecosystem? How are people using stablecoins today? What are some of the use cases that have sort of been widely adopted so far?
Yeah, I mean, obviously as a trading asset against other blockchains and other cryptocurrencies, I think first and foremost that's really where stablecoins came into the fore. I mean, really when it was P2P exchanges to buy Bitcoin, you were basically sending a PayPal transaction and you were sending dollars, and really, I think that innovation is sort of amalgamated into, you now have effectively euro dollars that exist, when you look at what, the likes of Tether, et cetera, have created in terms of offshore dollars, and the advantages that's presented to, the global south in terms of, banking unbanked, et cetera. That's a really powerful use case. I mean, first and foremost, they are used within sort of the traditional crypto ecosystem. However, now I think we're seeing them start to spread and almost start to infiltrate, traditional financial payment systems, but also traditional financial payment services as well. We're seeing pension funds and asset managers start to interact with these too.
So how do you think GBP stablecoins will fare against a more controversial question, which are the central digital currencies, and why? I think, the UK Bank of England has had a long-running series of exploratory commitments to look at central bank digital currencies or CBDCs. They put out research reports. They've, requested industry perspectives. How do you view those things? Like, you would obviously be bringing to market a central bank digital currency equivalent, except it wouldn't be issued by your platform. How do you talk about that?
I think that debate is a really interesting one. We could probably do an entire podcast on the difference between, public sector and private sector innovation. I think one of the advantages that we have, even against larger public and private sector businesses, is the speed at which we are able to innovate and develop and roll out products. We don't have the same levels of bureaucracy that we have to deal with. We don't have to consult to the same degree. There's 8 of us. There's thousands that work within the public sector. So every move the bank makes, there's a real systemic risk. So I guess with that comes a substantial period of time that it takes for them to develop any kind of technology. And what's potentially unfortunate for them is it's very hard for them to stay in front of innovation. So generally, by the time that they bring out a product, it's probably going to be lagging where the private sector already is. So I guess first and foremost, we are able to roll out a product much faster than what the central bank might be able to do, but also where the central bank want their products to be used isn't necessarily within, the private sector financial system. It might be, for example, from, the movement of central bank money, either whether that's intercentral bank or, facing, central bank transactions between tier 1 banks, etc. For me, I think that is where they see the appeal and the benefits of a CBDC initially. However, I guess it comes back to the private-public debate and why do we use privately owned social media versus publicly owned social media?
Right.
And I think that's quite a good analogy.
That is a great analogy. And it's interesting because this debate hasn't just been happening at the Bank of England, it's been happening across many of the central banks around the world. The United States has taken a pretty firm position on this. In fact, the latest administration has basically said CBDCs will be outlawed. They want the private sector to digitize the dollar, move quickly, build things that are useful, that are great for companies, and help basically put US dollar-denominated bank accounts in the global south in the pockets of anybody that wants them. So I think it's a real interesting opportunity for the UK to export, GBP, but they need to probably partner with entrepreneurial teams to do this fast. And I think that seems like a good outcome. They still have all the power and control they need over the supply and control dynamics of the currency itself, while partnering with the private sector to basically deliver it and export it.
Exactly. Yeah. There's like I say, there's a lot of different points that you can break down and you can really delve into. But, first and foremost, what is the role of the central bank and what should they be doing? Should they be providing the payment platforms, or should they be providing the landscape with which the private sector can build, to cater for the public sector? I mean, we've also been working with the bank. We did it. We've done a number of hackathons that, alongside them, looking at how distributed ledger technology can work and how we can have this, crossover between, public permissionless blockchains and also private blockchains, etc. So I think it's really interesting. I mean, what's going on in America is cool to watch. You see what's happening in Wyoming, for example, and what they're doing as a state. There's different levels of innovation and I guess different levels of progress as well.
So if you could see maybe some changes from the policymakers to better support integrations of stablecoins into the UK economy, what are some things that you would welcome as sort of like policy changes?
I think to dive into that, it's important to look at, the PRA, the Prudential Regulatory Authority that sits under the Bank of England, and the regulatory, landscape that they're developing is actually different from that of the Financial Conduct Authority. So basically, the PRA regulate the banks, and the FCA regulate basically everything else that interacts with money. And at the moment, we come under the FCA's regime, and I think they're actually making a lot of progress, which is great to see. And I think they're also starting to listen, which is also really good to see. We've submitted a number of discussion papers both to the FCA and to the bank, in terms of how we think stablecoins should be viewed in the UK, and that's everything from how they should be collateralized and what those the high quality liquid assets that stablecoin issuers should be able to to hold in custody as collateral. We actually think the scope of that should be relatively limited. It's also separating the difference between non-yielding stablecoins and yield-bearing stablecoins. Is a yield-bearing stablecoin a stablecoin? There's all these sort of fascinating debates. I mean, for us, we very much think that be a representation of cash, if that makes sense. It should be a cash bearer instrument that shouldn't provide a return, because if we have cash under a mattress, it doesn't. You want it to look as similar to that and almost be programmable cash.
Yeah, it's a good point. And one of the key mandates, by the way, of the Bank of England is to support the utility of cash. And I think the same properties in one of the key use cases of cash is basically for the informal economy to really facilitate, even in rural areas, exchanging and trading of goods, services, and wealth. So there's a lot of interesting use cases. And I think from the philosophical to the pragmatic, you guys are fitting right in there. So for our audience, who is a bit familiar with stablecoins, but tell us about Agant and GBPA.
I guess to touch on my journey, it probably makes a little bit of sense as to how Agant ever came about. So I kicked things off at Agant 14 months ago, or actually 15 months ago now, in January of last year. And really the way that I got there was a little bit cumbersome. So my background, as I touched on earlier, is in agriculture.
A humble farmer.
Yeah, literally. My first job after uni was buying and selling carrots. I used to trade carrots both into and out of the UK. Which was great. And then obviously got massively into crypto and digital assets in sort of the 2020s. But the firm that I worked for, like many others, was a victim of FTX. So I was unemployed on that Tuesday afternoon watching Kobe's podcast with Justin Sun, which was a little bit fascinating. So I actually came out of being in sort of the digital asset ecosystem and worked in traditional assets, moving money for agricultural businesses on traditional financial payment systems. And very quickly realized that, we have, faster payments, BACS, CHAPS, SWIFT, etc. They all work, they all do the job, but they're really not that great. And having spent sort of the previous 3 years in crypto, I was very aware that there's a very efficient system that is really good at moving value from A to B, and that is the blockchain. And so that was around the time, November 2023, both the Bank of England and FCA were publishing their discussion papers into the use of stablecoins in both retail and systemic payment systems in the UK. So I guess to sort of spell that out, systemic is basically anything that the banks basically interact with. We're talking the movement of hundreds of billions in daily volume. Retail is more, from me to you. We're not going to bring down the Bank of England when we send a transaction to each other. So I just put the question to some lawyers and said, look, what's your views on a UK domiciled, UK regulated, privately issued stablecoin? And I guess my vision for Agant was to create the most boring kind of stablecoin, so to speak.
Make crypto boring.
Yeah, exactly. One that you can kind of poke with a stick and say do something, and it just doesn't do anything. Because if we're going to have this foundation layer for on-chain finance in the UK, I know that's a bit corny, but we need something that everyone can trust, that is transparent and secure. I kind of look at it, is a pension fund going to feel comfortable interacting with our product? And if they aren't, then we're taking on too much risk. DeFi ecosystem is there, but we want people to go and build on top of our product. We don't want our product to be the DeFi ecosystem, so to speak. So that was really the premise. And it kind of just grew arms and legs. I mean, it was a little bit of an off the cuff comment, and we really didn't think we were going to get particularly far. And then every single conversation that we've had over since we sort of had that initial conversation has kind of spurred us on. And yeah, here we are.
All right. Well, it sounds like it's been a really cool 16, 18 months here. So what's the long-term vision for Agant in the future of GBPA? For stablecoins, they're now a multi-$100 billion market. There's US dollar denominated ones. There's Euro stablecoins. There's a big gap in the market for obviously a Great British Pound that's digitized. What would you love to see happen in the next 5-10 years? What does that look like?
Yeah, we'd love to see national and international adoption of GBPA amongst both, the financial service ecosystem, the UK, financial sector, and also, I guess the entirety of the UK. We see a real benefit that our product offers, and we have quite large ambitions in terms of what we want to achieve. I guess I kind of look at what the guys over at Tether have done in terms of, being one of the largest holders of US government debt, and we want to emulate that in the UK. It's the 4th largest currency in the world. It plays an important global role, and we want to play an important global role in supporting it, on chain.
It seems like such an obvious thing for the national interest of the UK to have an alternative to these other options out there and to facilitate it. So I wish you well in this ambition. What's one thing you wish more people understood about stablecoins that seems to be confusing or creating, trepidation in their adoption?
I think the best one is when you talk to people about crypto and digital assets and they say, so what are you actually mining? So no, I think it's actually very simple. If you look past the jargon that exists within the digital asset ecosystem, really what is happening is actually not particularly different from what already happens. A lot of the DeFi products that exist on chain are just digital representations of borrow lend protocols that the banks basically do themselves. Okay, it might involve someone over speaking to other people over the phone, but the premise is really the same. So I think for me, the sector has a habit of overcomplicating and using obscure words to describe things to make them sound novel when they're really not. So yeah, I think bringing back the simplicity that actually exists. We really try and keep things simple, and I think that's quite an important factor for us.
So a digital expression of a pound that's stable, foundational, and digital. All right. Any final thoughts or messages for our listeners today?
Yeah, I guess a funny one is blockchain.com was actually the first wallet that I ever had. So yeah, being on the podcast is pretty cool, and I really appreciate you having me.
Well, thank you for joining us, Andrew. And with that, please remember to subscribe to our channel and leave a review if you enjoyed today's episode. Until next time, I'm Nick Carey on behalf of the entire blockchain.com team. Thank you for tuning in.